all of the existing cryptocurrencies have burned a certain percentage of their total supply. And while most people see this as something totally normal, burning tokens also creates a chance to manipulate the cryptocurrency in question. So in this video, coin burning will be explained together with all the tricks developers of a coin can pull off to manipulate their coins while burning them. So I will try to do this video very quickly, so I won't take up much of your time, and that you know the essence of what I'm trying to teach you, trying to tell you. But it is important to actually know what coin burning is. And before we get on to the more important parts of this video. So coin burning is quite literally what the name implies. Most cryptocurrencies have a limited supply of coins. Like for Bitcoin, this is 21 million coins. And with coin burning, a part of these coins are burned and thereby destroyed, reducing the available supply of that coin. Of course, these coins are virtual and cannot literally be burned or destroyed, and therefore what really happens is that the coins are sent to a private crypto wallet, which is locked forever and for everyone, so no one can access it. It cannot go out of the wallet, but it's just there. So the coins are practically in a wallet which cannot be used. So why would the developers of a coin burn tokens? Well, there are multiple arguments made, and the most common one is that the scarcity of the coin increases, but other ones are also to increase reliability for new investors and to increase the token price. So this sounds quite normal, but there are a few things to look out for and to be aware of. So the first thing is that you should be aware of that developers can hide whales. In other words, people with a big percentage of the total coins in their wallet by burning coins. They can hide them by burning coins. And these whales can create massive price changes. So it's not a good thing to have whales in your coin. So at coins made with the Binance Smart Chain, this works as the following. If a coin is made with 100 million total supply and developers give themselves 10 million of these, so 10%, and after this they burn 50 million coins, so 50 million coins are sent to a burner address, then this means that they own 20% of all available supply, so all the supply that can be bought. But in reality, it will show you when you look up their wallets, is that they own 10% of all supply, which is still a lot, but it looks less. And this is deceiving for people wanting to buy or research that coin. So this happens because when the percentage of coins owned is calculated, when you look up their wallets, the coins on a burner address are also taken into account. So this is the first thing you should be aware of when you see that a lot of coins have been burned. And another thing that you should be aware of is that burning a percentage of the coins artificially increases the coin's market cap on certain websites. And market cap is used by a lot of people to see how big a coin is or how many people are in the coin. So this works as the following. When a coin has 100 million supply and is traded for $1 per coin, the market cap is 100 million. And when after this 90% of the coins, so 90 million are burned, the price will rise to $10. But when the market cap is calculated, all supply will be considered. So again, total supply and not available supply. And this means that the market cap becomes 1 billion, so times 10, without the coin achieving any type of growth, just burning 90% of their coins. And the last thing you should know is the psychological part of burning coins. And that is when people see that a lot of coins have been burned, they will feel that the coin is becoming scarcer and they will be attracted to it. And in reality, you should always be critical for this and ask why the developers did not just create less supply instead of burning it. So in conclusion, burning coins or tokens is not always bad, but you should always be critical of what it means when it happens. So I hope to have taught you something new about crypto in this video, and make sure to now apply it for yourself. See you in the next video.